welcome. You've joined us on Market Fatafat right here on ET Now. I'm Ashesha Dwaryu, with me is Ankita Saxena. And this is a show where we discuss all the stocks that are buzzing in trade and turning out to be another good day for the Indian markets. But let's also put the spotlight on the kind of moves that we're seeing. And ET Now caught up with IT Minister Ashwini Vaishnaw on the sidelines of the Semicon India 2025 event. He shared India's plans for Make in India chips, adding that global brands are keen on investing in the country. Let's go across and listen into what he had to say.
I'll take two questions. I understand you have to go. All right. Thanks very much, sir, for joining us here on ET Now. First things first, the whole industry is awaiting the rollout of ISM 2 scheme. What do you think are going to be the key focus of the government as far as that scheme is concerned?
See, our focus has always been that we should develop the entire ecosystem. So far we have 2 fabs and 8 ATMP units, where out of which 4 are already starting production now. And in future, we would like to have more and more equipment manufacturers, chemical manufacturers, gas manufacturers, and the people who get into the entire semiconductor ecosystem, the people who evaluate the product, people who test the product. For example, this ingot manufacturing, this also should be part of the entire process. And as you know, the entire process starts with this quartz sand, silica-rich sand. From this sand, this ingot is manufactured, and from the ingot, the wafer is manufactured. Then the wafer is fabricated. Then the chip is done. So this entire process should be there end-to-end in our country. That's the focus.
And sir, the overall focus of the government as of now is to create an overall ecosystem. That's what you and the Prime Minister also mentioned this morning. I also want to get in your sense on the kind of interest that you're seeing from global brands, given the fact that we are at a very interesting juncture globally in terms of business and trade as well.
All the global brands are very keen to come to India, and the reason for that is they trust our country. We respect IP rights, we have a very deep talent pool, and we are developing that talent pool to a totally next level. 278 universities have latest EDA semiconductor design tools, and the students are today designing semiconductor chips, and they are manufacturing the chips. I mean, there would be very few such instances in the entire world where the students are developing such strong capabilities. So I'm very happy that we are developing the entire ecosystem in our country.
So just one final question before we let you go. This is essentially on the timelines for ISM 2. Do you have any timelines in mind, or what could the industry be could be watching out for as far as the timelines are concerned?
In the next version of the semiconductor mission, our focus will be on getting the equipment manufacturing, the chemical manufacturing, all those ecosystem partners to come to India, and their interest is very strong. So we are working with them on how to structure the ISM.
Thank you very much, sir.
All right, moving on and getting started with the show and getting you all the top buzzes in trade. Now we are joined by Osho Krishan, who's the Chief Manager, Technical and Derivative Research, Angel One, who's joining us on the technicals. And from our research team, we're joined by Rabinder and Kanishka, as always. Good afternoon to all of you, and thank you so much for joining us. Let's get going with all the stocks that are in focus today. And first up, of course, seeing some sweet gains in the sweet spot of the sugar stocks, Balrampur Chini, Sri Reniko Sugar. All of these stocks are in focus on the back of the fact that the government has allowed the production of ethanol from sugarcane juice, syrup and all types of molasses without any restrictions on volumes in 2025-2026. Now, a note that the new ethanol supply year starts from November 1st. Now, as far as the government notification is concerned, that adds that government will review the sugar division to ethanol periodically to ensure the domestic sugar availability. And basically, the sugar production is set to surge, and that is going to be led by the above normal monsoon. And on the back of this notification that has come in from the government, these stocks are seeing some sweet gain. Balrampur Chini, Sri Reniko Sugar and Triveni is in focus on the back of that.
Well, yes, so the entire sugar sector in focus on the back of that latest announcement that came in from the government. But let's also put the spotlight on the real estate sector then, and Prestige Estates in particular on the back of a Motilal Oswal report where they've gone ahead and upgraded the stock to a buy versus their neutral rating. In fact, they've given a target price of 2,044 versus their earlier target price of 1,646. They say commissioning of new malls will drive growth for the company beyond FY27. In fact, they've also said that management continues to remain optimistic with respect to long-term performance of the company. They are projecting strong growth from FY27 onward once the revamp has been completed. In fact, the company also has aggressive expansion plans and hence Motilal Oswal estimates 20% CAGR in retail revenue income over the period FY25 to 27. So the management is very optimistic, brokerage houses too are very bullish. Phoenix Mills in focus up 3% on the back of this report.
All right, moving on then to the next counter. The next counter in focus is Aster DM. That's what you've picked out for us. Osho, tell us what you see on the charts for Aster DM. If you look at the chart, if you pull up the chart for Aster DM, in fact, today itself it is trading with gains of almost 2.4%. It has given solid gains of 57% in the last 6 months. Do you see this positive momentum to continue?
Very good afternoon to all of you. Firstly, thank you for inviting me on the show. Well, looking at the technical perspective of Aster DM, then this counter has been comfortably hovering above the short-term moving average, and from quite some time in the recent period, the counter have emerged as a gain decent traction in terms of volume. So I expect that the recent traction can give a boost to the counter. On the higher end, 620.25 is the immediate resistance. So once we break through the zone of 625 on a closing basis, then we can see a decisive upsurge in the counter. On the higher end, 660 is the immediate target that one can expect in the short-term period. Overall, the technical outlook is very robust and one can look for buying opportunity in the counter.
So you can look for buying opportunity in Aster DM, that's the word coming in. But let's get going and let's talk about the healthcare sector more then. Fortis Healthcare, Rabinder, if you can tell us what is the news flow here and how is the stock reacting?
Well, as Fortis Healthcare is in focus, where company has announced that the company's wholly owned subsidiary International Hospital Limited has entered into a 15 years lease agreement with RR Life Sciences Limited for approximately 200-bed fully operational multi-speciality hospital in Greater Noida. And Fortis has been previously managing the facility under operation and management arrangement since its launch in October 2022 and will continue to operate the facility at Fortis Hospital Greater Noida under the new lease agreement. And with this above, the Fortis will assume complete operation and function control, allowing it to consolidate the hospital performance within its network. And the hospital is built on 1.35 acres UP SIDA lease and land parcel and 2.7 lakh square feet of build-up area. The facility has a potential to expand capacity to by an additional 50 bed with an existing setup, taking the total of to approximately 250 beds. So back of this, Fortis Health is in focus and the stock is up 1%.
All right, let's move on to the next counter. Osho, you figured out Cochin Shipyard for us, again, another counter that is doing very well in today's trading session, up 3.8% in trade. This counter again is a giver. It has been giving a lot of gains in the last 6 months. Again, 42% odd gains coming in on Cochin Shipyard. Do you see this momentum to continue, or are these levels right to get into this counter, or should we wait for correction?
See, the counter have already seen a decent correction from the zone of 2400 towards 1600 odd levels, and in the last 4 to 5 trading weeks, the counter have seen a very strong consolidation around the 200-day simple moving average. So I expect that current levels is very lucrative for the counter to start accumulating, because the technical parameters have came down towards the oversold terrain. So this is a very decent levels to start accumulating the share. In the last 2 trading sessions, the counter have started gaining a traction also. So I expect that from here onwards, one can expect a decent rally in the counter. On a very short-term perspective, 2000 kind of a zone can be seen in a very short-term time frame, but it has a potential to retest the zone of 2400 from short to medium-term time frame. So at these levels, one can look for accumulating the counter, keeping 1550 as a stop.
Okay, so 1550 is the stop loss that you should keep on your radar. But let's also put the spotlight on BSE. Kanishka, weekly expiry changes and brokerage houses expect this to be a negative for BSE, isn't it?
Absolutely. So BSE shares, like you said, are in focus because NSE has shifted its weekly expiry to Tuesday, and that pushes BSE contracts to Thursday. And that's the reason why the stock is in focus. In fact, according to Goldman Sachs, this change could cost BSE around 3% market share and also lead to a 2% EPS decline in FY26 itself. Now, though the flow is not all that positive, the stock continues to trade in the positive territory, trading more than 1% higher as we speak.
All right. With that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more buzzes on the other side. Stay tuned.
Welcome back. You're still tuned into Market Fatafat, a show where we discuss all the stocks that are buzzing in trade. And let's put the spotlight on the auto sector. Remember, yesterday all of these auto stocks were buzzing on the back of auto sales data for the month of August. And we now have several brokerage reports. In fact, Motilal Oswal says that green shoots are now visible across the two-wheeler industry, and demand revival hopes are pinned based on the kind of outcome we see from the GST meeting that is scheduled to happen over the next 2 days. In fact, they've also said that passenger vehicle wholesales remained weak in the month gone by as customers continue to postpone their purchase decisions based on GST outcome. Their top picks continue to remain M&M and M&M within the auto sector. In fact, we have Incred also, which has come out with their report where they say early festive period influenced dispatches which deviated from the retail trend. They prefer two-wheeler OEMs where prospects of GST rate cut continue to remain high. So yes, as far as festive sales are concerned, they were solid, but now customers continue to postpone their purchases in expectation of GST rate cut, particularly for the auto sector, and the entire sector is in focus on the back of that.
All right, the entire auto sector is in focus on the back of that news. But let's come to the IT pack. Then Osho, you picked out a mid-cap IT name, Coforge. On the charts, how do you see this particular counter? Coforge has been an outperformer from the IT pack. Do you see this outperformance to continue?
See, of lately, there has been a strong traction in the mid-cap and large-cap IT companies. But Coforge, as you mentioned, has outperformed and is technically looking better from all the other counters placed in the space. Even on the technical front, there has been a formation of inverted head and shoulder on the daily time frame chart, and that is based at a very strong support of 200-day simple moving average. So I expect that from here onwards, the counter have a potential to test the zone of 1920 in a short-term perspective. So one can definitely try to accumulate the counter at current levels. From a risk-reward point of view, the counter is placed at a very strong level. So one can definitely try to accumulate. 1920 will be the immediate target that one can expect.
All right, so positive traction on Coforge, but let's move on to the next counter that is in focus on the back of a brokerage note, and that's Bajaj Finance. CLSA has come out with a note and they're maintaining an outperform rating with a target price of 1,150. The CLSA says that they're sanguine on the medium-term loan growth and see positive momentum. The company is focusing on integrating AI across its businesses, and they have reiterated its credit cost guidance of 1.85% to 1.95%. Now, the impact of repo rate cuts has started following through, and the management expects a 10 bips NIM expansion over the year from the current levels. In the SME financing segment, the company has started trimming growth to curtail potential asset quality issues, and Bajaj Finance remains top pick for CLSA in the financial pack, along with State Bank of India and ICICI Bank. On the back of this bullish note coming in from CLSA, Bajaj Finance is trading. It is trading in the green right now, but it has given up all those morning gains. Currently trading towards the day's lows. It is trading with gains of 0.2% nonetheless.
Okay, and it's start of a fresh new month, so we have operational data coming in from across sectors, and that has already started flowing in. NMDC on the back of operational update. Rabinder, tell us, how are they?
Well, yes, NMDC is in focus on the back of their monthly business update, where for August month, the company's iron ore production saw an uptick of 9.8% year-on-year basis to 3.37 million tons against 3.07 million tons last year. And we talk about sales, then company's sales grew by around 8% to 3.39 million tons from 3.14 million tons in the same month of 2024. And for cumulative company sales for the April to August 2025 stood at 18.37 million tons, up from 16.27 million tons as a year later. And for the and if we talk about production, then the company's April to August 2025 reached at 18.45 million ton as compared to 14.43. So back of this good operational update, NMDC is in focus, and the stock is up approx 3.5%.
All right, moving on from NMDC to Crompton Greaves on the charts. Osho, why we picked up Crompton Greaves? Because this counter has been, in the last 5 odd days, it has seen some good traction. But otherwise, this has been very, very range bound, if you will. What do you see in the charts for Crompton Greaves?
See, definitely the counter has been into a very strong range. On the lower end, the support is placed around the zone of 315 to 20, while on the higher end, 360 is the immediate resistance. But the kind of traction that this counter has gained in the last 3 to 4 trading sessions, it is expected that the counter can retest the zone of 350 to 360 in the short-term perspective. So it is just for a short-term point of view that one can look for buying opportunity in the counter for a higher target of nearly 350 followed by 360, and 360 is a crucial zone. So if it gives a breakthrough above 360, then we can see a continued momentum of nearly 40 to 50 points on the higher end from 360 odd levels. But from a shorter term point of view, 360 will be the target that one can expect in a short term point of time.
Okay, so that's the view coming in on Crompton Greaves. The stock is up nearly 0.5% as we speak, but a whole host of tire companies are abuzz in trade. Kanishka, tell us what is the news here?
Absolutely. So tire stocks are on fire today. Now let's take a look at some 5 key reasons. First up, August auto sales have come in better than estimates. In fact, data from the rubber board suggests that SEAT, Apollo Tyres and JK Tyres, their sales were up nearly 4%. MRF saw an uptick of about 2% in a month gone by, whereas Balakrishan Tyres, they saw their sales go up by 1%. Meanwhile, raw material prices are stable with natural rubber prices also on the downward trend. Up next, the third reason is that there's also festive season push, due to which replacement demand is likely to pick up. Other than that, export demand could also be revived once tariff clarity emerges, that is the US tariffs that have been imposed on India. And apart from that, lastly, there's been some DI buying as well in some counters as far as tire stocks are concerned, and that's the reason why all these tire stocks are in the fast lane today.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you more buzzes on the other side. Stay tuned.